Markets rally today as geopolitical tensions ease between the US and Israel and Iran, and oil crashed more than 8%. That is not the moves in stocks and oil that we were expecting on Saturday and Sunday night before the futures open. It's a wild reversal that you need to see. We'll break it all down today. As always, if you want the full analysis in today's trade setup, make sure you watch the full video at marketscholars.com. In our Market Outlook video. The link to that is in the description and the pinned comment down below. Stocks kicked off the week with a strong rally as oil prices, you can see here on the chart, plummeted more than 8%, down a little bit more too, almost 3% in the after-hour session. Despite recent U.S. strikes on Iran over the weekend on their 3 nuclear facilities. Of course, the risk premium started to unwind very quickly today, even after news broke that Iran strike back, because all their missiles were just shot down and they were widely expected to be coming. And so it wasn't a surprise. And the market kind of feels like that was it, that Iran will retaliate and then be done. And so risk appetite really took off as a result of that. On the other hand, when you look at yields here, what really kind of moved the yields, the bond yield market, was Fed Governor Michelle Bowman, a known hawk, surprised markets by saying a rate cut in July is on the table. First of all, the odds for a rate cut in July were pretty darn low. And second of all, Bowman is not considered someone who is looking for cuts. So that kind of surprised the bond market a little bit, helped pull bond yields lower. While sectors like real estate and discretionary surged. You can kind of see here discretionary really benefiting from Tesla's news. But then you also had interest rate sensitive areas doing pretty well, matching the market and doing pretty well. This was a classic risk on rotation. Breadth improved a little bit, didn't take off necessarily, but volatility dropped again. And the market responded to the lower inflation expectations and fading geopolitical fears. So that's the big picture driving today's market move. Lower yields, a geopolitical cool down, and strong economic data all working together. Before we dive deeper into what this means going forward, if you're finding this update useful, go ahead and like the video, subscribe to the channel down below. It helps other investors find this content and keeps these breakdowns coming to you daily. All right, what really fueled today's rally was the move in bond yields. As you can see, we had a pretty decent drop going into expiration, but we can drop down another 5.5 basis points today. You can see how we're pushing against a lower Bollinger Band in this Bollinger bandwidth inside the Keltner channels. The market began pricing in a little higher, still low probability, but higher than what it was. Probability up to about 20% probability of a rate cut starting in July. This drop gave immediate relief to rate sensitive areas like real estate. Utilities did pretty well today. Not necessarily healthcare or staples, but those two rate sensitive areas did well as discretionary. Thanks to Tesla did pretty well today as well. And you can see that in the sector performance here. Consumer discretionary bouncing back up. Look at that move after getting a bull tag. Bouncing back up above the moving average. You got a intermediate line bouncing back up above the 70th percentile. So you have the dark green shading again. Real estate down here, you can see also did pretty well today, up 1.5%. You can see its 3-month return finally turning positive again with the dark green shading and the green line. Industrials on the other side of the cyclical area also got a look like it got a yellow line. Didn't quite get the bull tag, but it got a yellow line with a slight close below the moving average and a nice little rebound today. So this wasn't just a typical tech-led rally. In fact, tech underperformed to a small degree. So this was a much more balanced move today. Breadth also looked a little better. It wasn't quite positive, but it did get up to a smaller negative number. We saw some pretty solid participation across the board, which confirms that this wasn't just a defensive-led bounce, rotation bounce like we've seen in the past. It had some real legs to it. Nice, good pattern that I break down even more in the full video. With volatility dropping and the dollar softening, the intermarket signals really reinforced a risk-on environment right now. So the theme today was the rate relief that we've getting from the interest rates, unlocking new leadership that we weren't expecting as over the weekend, and the market is rotating accordingly. So again, if you want the full breakdown of today's trade, plus macro insights, sector rotation, intermarket analysis, and technical charts that matter, you can watch the full Market Outlook video. It's live now down at marketscholars.com. The link is down below. Also, this in-depth analysis is available for for all of our subscribers, including our foundation level members. You can join right now for just $29 a month, or get 2 months for free if you sign up for our yearly plan. Thanks for watching. Have a great rest of your Monday night, everybody, and we'll see you all tomorrow.